Hi, I'm Devin Shute, and welcome again to the Money Minute. So last week we spoke about how important investment returns actually are. It is very difficult for an investor to have a fund that they are invested in that in 1 year it's the top performer and in the next year the bottom. We find it much easier to put our money in something with more predictable outcomes. However, there is a temptation to be too predictable, and this is putting all our cash in the bank. Now, while this may seem safe, you can see your money grow every year. Unfortunately, it's probably not going to be growing fast enough to keep up with inflation, and that means you're getting poorer in real terms. For this reason, investors need to take a calculated risk and have some exposure to shares, which drive your long-term returns. The trade-off for these higher returns, unfortunately, is short-term volatility, and this can be difficult to stomach. Now, to help handle this volatility better, it is useful to look at longer time periods and ignore the short-term volatility. Our fund of fund range recently celebrated its 5-year anniversary, and this milestone is important as it demonstrates how they performed through a number of different market conditions and crises, and this includes things like the COVID crash, interest rate spikes, and multiple wars. Now, to give you an example, if you took R1 million and invested it in the bank 5 years ago, that money would now be worth 1.32 million rand today, but you would then still need to pay tax on top of this interest earned. However, if as an investor you are comfortable taking on just a little bit more risk, that 1 million rand invested in our stable fund would be worth 1.5 million rand today. That's almost 150,000 rand more over the time. Now, depending on investors' risk appetite and their investing goals, they might have decided to invest in our more growth-focused flexible fund, or even our offshore fund, and their R1 million investment would be worth between 1.67 and 2 million rand today. The point I'm making is that investors should not avoid risk, they should manage it. By taking professional advice and investing in high-quality, well-diversified investment solutions, they can weather the storm that short-term volatility sometimes brings and deliver significant inflation-beating returns on their hard-earned money. Thank you as always for watching. Have a great week.